If you're launching or expanding your business, securing funding is likely a top priority. But with so many funding options available, it's easy to get lost or confused about which ones are best suited for you and your business needs. That's why, in today's video, we're exploring 5 ways to secure the funding you need to kickstart or grow your business in 2024, along with the pros and cons of each. In case you're new to the channel, my name's Ari Page, and I'm the CEO of Fund&Grow, a company that specializes in helping entrepreneurs across all industries get access to funding. So whether you're starting a brand new business in 2024 or you're an established business looking to expand, we've got insider tips and strategies to give you all the information you need to confidently choose the perfect funding option for your business. So let's jump right in and explore the 5 best ways to fund your business in 2024. Now, the first method we're exploring today is the SBA loan, which is a secured form of capital that comes from an agreement between the lenders and the U.S. government's Small Business Administration, also known as the SBA. Now, an SBA loan is secured. So what does secured mean? It means the funds you receive are backed by collateral or the assets that you plan to purchase for your business with the loan, such as real estate equipment or inventory, to name a few examples. Now, lenders are more willing to approve businesses for this type of financing because the SBA shoulders a lot of the risk, since they guarantee a portion of the loan will be repaid should the borrower default. So it's a lot less risky for the lenders. Because of that guarantee, lenders can offer more flexible payment terms and lower interest rates than what's usually offered to new businesses. For instance, as of December 2023, businesses can expect interest rates between 11 and 15%. Some of the pros of SBA loans are that they're designed specifically for small business owners and can be used for nearly any business need you have, whether it be a startup cost, equipment, working capital, or real estate. But on the downside, these lenders look at your personal and business credit to qualify you for the loan, and they require you to be in business for at least 2 years. So if you just opened your business a month ago, you won't qualify. Also, these lenders are very particular with the businesses they lend to. So you may get denied just based on the nature of your business or where it operates. Long story short is SBA loans have strict eligibility requirements and a lengthy application process, which may not be suitable for urgent financial needs. And with the 2-year minimum time in business requirement, it isn't a feasible option for brand new businesses. Now, the second option we're covering today is your traditional business loan. When it comes to this type of loan, you'll be turning to trusted sources like banks and financial institutions. These loans don't enjoy the same government backing as SBA loans, but they've stood the test of time and continue to be a go-to option for many business owners. With this option, businesses receive a lump sum of money that they pay back over a fixed period, which can be as long as 10 years. Like SBA loans, one thing to be aware of is that traditional business loans will require collateral to give them that extra peace of mind that their investment is protected. However, with traditional business loans, businesses do get flexibility in terms of loan amounts. So whether you're just starting out or looking to scale, these loans can be customized to suit businesses of all shapes and sizes, and approvals can be anywhere from $5,000 to $1 million. But hold on, folks. Before you rush to the nearest bank, there are a few things you need to know because these loans come with their fair share of challenges. Lenders have strict eligibility requirements, meaning you'll need a solid credit history, stable revenue streams, and a bulletproof business plan. It's all about proving to lenders that you're a reliable borrower and you'll be able to repay the loan. And here's the reality. The approval process for traditional loans can be a bit of a marathon, so you should be prepared for meticulous assessments, extensive documentation, and close scrutiny from the lenders. Now, let's talk about the elephant in the room, interest rates. In 2023, we saw interest rates across the board skyrocket. And as of this recording, you can expect to pay anywhere from 3% to 48%, depending on how risky the lenders deem you and your business. Also, we must revisit the collateral requirements. If you fail to make those payments on time, there's a risk that the lender may seize your collateral. So if you go this route, it's paramount to stay on top of those repayments and protect both your business and its assets. Now, let's take a closer look at the third option, venture capitalists or VCs. Venture capitalists are investors who provide capital to promising startup companies with high growth potential, innovative ideas, and a strong vision for expansion. VCs can also offer valuable expertise, advice, and connections, which can be instrumental in propelling your business forward and opening doors to new opportunities and partnerships. However, we must acknowledge the downsides of partnering with VCs, one of which is the amount of equity they typically require in exchange for their investment. VCs often demand a substantial ownership stake in your company, as much as 50%, so you should be prepared to give up some control of your business if you go that route. You'll also have to involve them in important business decisions like strategic direction, major hires, or even day-to-day operations. This loss of control can be challenging, particularly for founders those who have a strong vision and prefer to make their own independent decisions. Lastly, it's worth mentioning that securing funding from VCs is a highly competitive process. VC firms receive countless proposals and only a small fraction get chosen. This means you'll need to dedicate significant time and effort to crafting a compelling business plan, pitching your ideas, and standing out amongst the competition, which can take months and doesn't solve your immediate need for capital. Number 4 is perhaps the most competitive option, but it is loved by businesses because it's the capital that you don't have to pay back, also known as business grants. Business grants are awarded to businesses by government agencies, foundations, or private organizations to stimulate economic growth, promote innovation, and address specific societal or industry needs. Unlike loans or investments, grants do not require repayment, making them an attractive funding option for entrepreneurs who want to avoid debt or diluting equity. But it's important to note, securing a business grant is a highly competitive process with eligibility criteria and strict application procedures. Grants are typically awarded based on merit, feasibility, and alignment with the grantor's objectives. Some grants may even come with specific reporting requirements or restrictions on fund usage, so it's essential to review and understand the terms and conditions associated with each grant opportunity. As I mentioned before, most grants are limited to uses involved in economic growth or research, which removes this as an option for many industries like e-commerce or real estate. Another factor worth considering is that since the funds don't have to be repaid, businesses may struggle to find a grant that gives them the amount of capital that they actually need to run their business. This last option is by far the best option in my opinion, because it combines many of the advantages of other funding methods we discussed without most of the disadvantages, offering business owners an all-around beneficial solution. So I'm talking about business credit cards. Business credit works like personal credit cards in many ways, but they offer higher credit limits and better rewards specific to business expenses without reporting to your personal credit reports. But one of the biggest perks is that they're revolving accounts at 0 interest. So you can max out the card, pay it off, then use the funds time and time again without paying interest for like up to 22 months in many cases. And it's important to understand that business loans and investors won't allow you to do that. It's a way to constantly have working capital to use in your business, and you only pay what you use. So if you have $100,000 in credit available, you don't immediately owe the bank for 100 grand. If you use 20,000, you only owe for the 20 grand that you've actually used. The main benefit of using a business credit card is the convenience and flexibility, since it can be used for nearly anything your business needs. You can pay for equipment, materials, inventory, vehicles, and even investment properties. There are also no financial documents or collateral required. You don't need to be in business for 2+ years to qualify, and you don't need to explain to the banks what you plan to use the funding for, making it a great solution for startups and seasoned businesses. Oh, and did I mention the perks? With business credit cards, you can earn cash back and rewards on your purchases, which is an incredible benefit you won't find with any other funding option out there. Now, if you're thinking, well, Ari, that all sounds great, but that won't work for me, I'm here to tell you that it will work, because we've worked with over 30,000 entrepreneurs with all different circumstances, and we got them the funding they needed. So I know this will work for you, and I'm gonna link a video in the description for you where I'll show you how it will work for you. I'll show you the strategies we use here at Fund&Grow to get entrepreneurs access to up to $250,000 of this type of funding, even when the banks have declined them. That way, you can do it for your business and get access to the funding that your business needs in 2024. So if you're interested in that training, it's linked below for you, and it's free to attend. There's no charge, so be sure to check that out. And there you have it, folks. 5 ways to fund your business in 2024. If you've enjoyed this video and found it valuable, please do us a favor, give it a big thumbs up, share it with fellow entrepreneurs, hit that subscribe button if you haven't already, and send it to your mom in an email. We post new content every week, and that's meant to help you start and grow a successful business, and we'd love to have you join our community. As always, thanks so much for joining me in today's video. I'm Ari Page, and we'll see you in the next video.